You're listening to an African Elements top news story for July 14th, 2025. Please visit our website at africanelements.org for more daily news. Zimbabwe's lithium industry. Challenges and opportunities. Zimbabwe holds Africa's largest known lithium reserves and stands among the world's 10 biggest producers. Lithium powers rechargeable batteries that drive electric vehicles, smartphones, and grid storage. Analysts expect the battery market to expand from about $79 billion today to nearly $350 billion by 2034, creating a global lithium rush. For a nation long haunted by unemployment and currency crises, this surge promises a rare lifeline. Turning promise into prosperity, however, demands that Zimbabwe capture more value at home instead of exporting unprocessed rock. To do so, the government banned raw ore exports in December 2022 after widespread smuggling and illicit artisanal digging drained revenue. Officials have also announced a 2027 ban on shipping even lithium concentrate, a stronger rule meant to force companies to refine and convert the metal on Zimbabwean soil. Beneficiation and value addition generate higher prices, skilled jobs, and downstream industries such as battery and chemical plants. Yet the strategy brings heavy costs for thousands of small-scale miners who once eked out a living selling raw ore across porous borders. With no permits, safety gear, or markets, many have been pushed deeper into poverty. Foreign investors, especially Chinese firms, have filled the gap. Zhejiang Huayu bought the Arcadia deposit for $422 million and is finishing a $300 million processing plant that can treat 450,000 tons of concentrate each year. Sinamine injected a similar sum into Bokita Minerals, while Chengxin built a concentrator at Sabi Star. In total, more than $1.5 billion has poured into Zimbabwean lithium, expanding production, building roads, and supplying scarce foreign currency. Communities welcome jobs, yet they also fear opaque contracts, land grabs, and profits that vanish overseas. Residents describe bulldozed fields, dried streams, toxic dust, and forced relocations that turn their villages into sacrifice zones. Environmental advocates warn that lax oversight could deepen these wounds as new pits open faster than regulations evolve. Economic obstacles remain equally daunting. Advanced refineries require reliable electricity, paved roads, skilled engineers, and billions of dollars in capital that the state cannot easily raise. Sharp price swings already forced Harare to soften processing rules once, highlighting the danger of tying policy to volatile commodity cycles. Observers estimate that up to 1.6 million additional tons of ore could be dug and shipped before the tougher ban takes effect, eroding reserves before they have delivered full national benefit. Corruption by politically connected lithium barons raises further doubts about whether ordinary citizens will share in new wealth. Advocates urge swift reforms. They propose accelerating the concentrate ban or imposing export taxes that fund domestic plants, publishing all mining contracts, directing a fixed share of royalties to clinics, schools, and roads, and requiring companies to hire and buy locally. Bringing artisanal miners into formal supply chains with training, safety standards, and legal purchasing centers would both protect livelihoods and reduce smuggling. Zimbabwe must also diversify investors, strengthen environmental law, and build technical colleges that prepare youth for high-skill jobs in a battery economy. If leaders embrace these steps, the lithium rush could charge the electric transition while lighting homes from Harare to the rural heartland. If they do not, the country risks repeating a painful history in which rich resources leave behind empty pits and broken promises. Copyright African Elements.